Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Monday, October 31st, 2011 is brought to you by Realtic. All right, let's get right into the mix. Markets are lower across the board. Dow is down about 155 points, NASDAQ down 25, S&P down about 17 on the day. Basically 1% across the board type drop. And again, what we're seeing today is a down day, which is exactly what we expected in the markets. For those of you that are members, you know we were shorting the market late last week in anticipation of this fall. But at the same time, I said to our members, be aware, Monday's going to be a very, very light volume day, Tuesday as well, in anticipation of the Federal Reserve policy statement on Wednesday. So the Fed meeting is early this week. It's a two-day meeting, Tuesday, Wednesday. Friday, you have the unemployment and non-farm payrolls numbers as well, which again makes this first couple days of this week very hard for the markets to have a major move down. Now, we're having a nice down move, but notice today how the markets were down here, and you have this support line right there. So we gapped down today, and this again coming on the back of intervention in the yen. Currency markets, Japan intervened substantially with the yen. Yen tumbled, dollar rose. We know dollar goes opposite the market, so therefore if the dollar is going up, markets are going to go down. But bottom line, people are also looking in Europe and saying, all right, well, Greece is done with now, but what about Italy? Italy's bond yields are hitting new highs, above 6% on the 10-year. So that's a problem there. Italy is multiple times bigger than Greece. In fact, well over $1 trillion in issues over there. And I think that's starting to be a realization here. But at the same time, the volume is so light, the markets just aren't able to continue to sell. Right now, we've done 120 million on the SPY in volume. That is on pace to be the lightest day in the last multiple months. All right, again, we're on pace to not even do 200 million today, which is a pretty big, crazy event in terms of volume these days. All right, so again, markets here, guys, gapping down. This support line right here, where's that support line coming from? Why do we have that there? Clear and simple, it's Thursday's pivot low. Thursday's pivot low is a big deal, obviously, because that was the day they announced the Greek deal. So obviously that low is going to be big. The market held it here, bounced up, held it here again, bounced up, held it here and closed below. So it looked like a breakdown, but for those of us that follow the in-the-money stocks methodology, you clearly know that there's no confirmation there, therefore there's not a breakdown yet. And sure enough, it reverses. It's exactly how the methodology shows us. The markets go up, and now are pulling back a little bit. But again, this level here, this 126.60 level on the SPY, this support line, this is a major level. And without volume, without a surge in volume, the markets aren't going to get through it. It's just not going to happen, folks. And again, what I said to my members this morning when we were kind of right around the lows of the day, early this morning right down here, I said, listen, unless you're going to get more volume in this market, don't expect for it to break. In terms of that, have a neutral to upside bias during the intraday period from these lows, meaning that at these lows, have a neutral upside. And that's actually the way it's happening. It's essentially a neutral. We're up a little bit off those lows at this point. All right, volume is a very, very important indicator. If you're a day trader, if you're a swing trader, you must pay attention to volume. All right, volume in the market itself will be the major dictator between up and down markets, or whether or not on an intraday basis the market's going up or floating down. All right, and again, right now, nice little retrace after a good pop-up. You can see this move up right here. Very nice move up, and we've kind of consolidated back down into that 20 moving average. So we'll watch that. We also have a fake print up here to gap fill, which again, who knows if that'll get filled at some point today or tomorrow. We'll continue to watch that, but that is a fake print upwards of the gap fill at 128.60, which is about $1.67 higher than current levels right now. If the markets do intraday get back below and close below this 20, you probably retest the lows. I still don't think you're going to break down unless we start to get some panic coming out across the world in terms of Italy or Japan or anything else like that. My projections continue to be correct. Late last week, we started to short the market here in themoneystocks.com. Remember, there's a free trial, a 7-day free trial if you want to get involved and start making money on all sides of the market. Just to give you one example today, folks, one of the stocks or one of the ETFs we shorted last week was FXE. FXE short today. Take a look at that drop on the FXE. And again, the short went out just around the 141 level. You basically moved out for a $2 gain or so today on the first half. So first half is already banked to profit, a nice solid profit, and then we're going to hold the rest with a break-even stop for more gains on the downside. All right, and there are a couple other shorts out there that we're watching as well that look very, very good. One of them I personally have myself. You guys, if you join the free trial, you'll get access to all my live trades. As I do them, I post them up on the hot charts and alerts. You get nightly videos. You get everything, basically. Chat room is separate, but that's an amazing vehicle if you want to really learn the markets and day trade the markets and swing trade the markets. The chat room's there. Remember, both 7-day free trials, you can take them both together, no obligation. Go to inthemoneystocks.com. All right, in any case, let's go back to the SPY here. Volume continues to be light. We're kind of just hovering here. In all fairness, the action today has been much like Friday. Friday, we kind of just had a sideways day. Today, you had a gap down, but it was the same thing. Very, very tight range all day long. The people, again, are all looking towards that Federal Reserve announcement on Wednesday. That will create the volatility, and then the Friday's jobs report will create the volatility. All right, the markets, again, if we go to the daily chart here on the SPY, which mirrors the S&P 500, this is a beautiful thing. A 20% move off the lows here. You were at 107.50. You topped out at about 129.50. So a 20% move up in the markets in the last month. But notice this. We hit gap fill, which is the white line, never closed above it. You closed above the 200 and this neckline, which is right here, but you never confirmed above either. And sure enough, now we're going back below. This is why the confirmation signal, which we created here at In the Money Stocks, this is a new proprietary signal that we have utilized and made tons of money off of, which again, you can learn if you join the free trial here or inthemoneystocks.com. But again, this tells us everything. It tells us whether it's a legit breakup or breakdown or whether or not it is or isn't. So you have to utilize this thing. And again, if we go back to the intraday, that's how we knew right here this wasn't a legit breakdown. You never confirm below. And what happens is, just to give you guys a sense, when you don't confirm, in this instance, you don't confirm what you're doing or what the institution and computer programs are doing, they're getting all the amateurs to go short right here, and then they're taking their money when they rip it the other way. So they're taking stops out on the long side, getting the shorts to pile on, and then they rip it the other way. It's a classic game. If you don't know these games and you're getting caught off guard and you're losing money this way, you must join inthemoneystocks.com. All right, and again, that 7-day free trial makes it about as easy as anything. Financials today are under pressure. MF Global filed for bankruptcy today, so financials are taking a little bit of a hit. MF had a lot of exposure to Italy and Greece and so forth, and obviously the financials. JP Morgan down $1.25 today. Goldman's having a big drop, down about $4 and change. But remember, Goldman and JPM ran up huge last week. I mean, look at this move up just over the last couple days of the week. I think Goldman Sachs was up $12 or so in Wednesday and Thursday of last week. Just tremendous move. So it needs a little bit of a pullback. I think Goldman's actually a buy here at gap fill. If it comes back into this level, I think this is going to be a no-brainer buy for a long at 106 on Goldman Sachs as a swing trade. All right, so again, folks, where we're sitting here, if we go back to the SPY, markets again having a small pullback. As you can see here, we're kind of right on this 20-moving average, still stuttering. There's no volume in this market. You can clearly see that by looking at the low end of your chart, 122 million. We were just at 120 and change when I started this video, so it even just shows you how light the volume is right now. Be aware. Come join us here at In the Money Stocks. It's a free trial, no obligation. Go to In the Money Stocks, just fill it out and sign right up. You'll get full access right away. Take care, guys. Have a great evening. And again, I'll be making some money this afternoon and tomorrow. Come join us.